Airbnb reported third quarter fiscal year 2024 financial results that demonstrated increases in revenue, in profits, and in cash flow. That being said, Airbnb stock is relatively flat year to date in 2024. In this video, I'll review the company's latest financial results and update my buy recommendation for Airbnb stock. I'll let you know if I think the stock is a buy, hold, or a sell. Remember, coming into these quarterly results, I did have Airbnb stock rated as a buy. I've had it rated as a buy all year long. So let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Airbnb reported third quarter revenue of $3.7 billion, which was up 10% year over year, primarily driven by an increase in nights stayed at the platform. So people are staying more nights on Airbnb. The company generated net income of $1.4 billion, which was a 37% net profit margin. Now, I've been talking about this lucrative business model that Airbnb operates on. It's the platform business model where Airbnb does not own any of the inventory on the platform. It just brings together guests, those people looking to travel, and hosts, those people that want to make their place available for people to stay in. Now, that relieves a huge capital expenditure for Airbnb. Remember, each home, let's say the average price of a home is between $500,000 in some countries and some states, upwards of over $1 million in many places around the world. People that own those homes are making them available on Airbnb's platform, and Airbnb gets to generate revenue and profits from those assets, right? Think about that. $500,000, $1 million assets that people own that are making it available for Airbnb to generate profits from. That's an extremely lucrative business model. Those heavy capital expenditures, they're being done by people. And then the people are putting the assets on Airbnb, letting Airbnb use those assets essentially for free, sharing in the profits while the people are putting up 100% of the cost of the asset, and Airbnb gets to generate a percentage of the profits. It's a very lucrative business model. I've been talking about that for several years now with Airbnb. It's one of the reasons why I've had the stock rated as a buy. The company's free cash flow in the quarter was $1.1 billion in cash from operations, and same for free cash flow. The trailing 12-month free cash flow came in at $4.1 billion, which was a margin of 38%. Again, demonstrating that lucrative model, right? When Airbnb makes profits, it doesn't need to reinvest those profits into more assets because the people are the ones that are investing in the assets. So Airbnb can use that cash flow, some of it, to improve the platform, make the website, make the app, make the business more attractive for both sides of the equation. And then the rest of the money, they can return to shareholders. The gross booking value on the platform, which is the total amount of money that people spent on Airbnb, that increased to $20 billion, and that was up by 10% year over year. And that was driven by a primarily increase in nights booked, and then a small increase in the amount that people pay per night. The prices have been stable on the platform, and one of the reasons why is because they're getting a nice increase in supply on the platform. Talking about supply, they now have over 8 million active listings on the platform. That's even after the company took some quality control measures and removed some hosts from the platform because they weren't meeting the company's standards. And this is growth seen across all regions and market types during the third quarter. Remember, just a few quarters ago, the company had roughly 7 million active listings. So they've added 1 million listings on the platform in a little over a year. That's huge because these are the assets that Airbnb gets to benefit from as people see these listings, and they're more likely to find something that causes them to book a stay. The more listings on the platform, the more people will book nights and experiences on the platform, which will then attract more hosts to the platform as they hear about their friends and coworkers and other family members in their network that are making money on Airbnb, and they'll be more interested in joining Airbnb, maybe putting up their spare room for rent on Airbnb, maybe converting their garage into an additional dwelling unit and putting that up on Airbnb. The word of mouth that's generated from all the people that are making money on Airbnb is facilitating a lot of this growth, as Airbnb has taken a significant lead in this segment. So it's a two-sided equation here, and it's a positive virtuous cycle that's feeding on itself. After it reaches this kind of scale that Airbnb has reached, it just will continue feeding on itself. It's going to be hard for any competitor to encroach on this business. Still, it's not like the company is without risk. One of the bigger risks are the regulatory concerns. Cities are trying to make it more difficult for people to convert homes into listings on Airbnb. And so that's putting a bit of a cap to the company's growth. Although I'm sure there's going to be negotiations between Airbnb and cities, because in the end, cities benefit from the increase in tourism. People come and they bring money and they go out and they spend money around and they help local businesses. So it's a win-win situation. They just got to negotiate better terms to acquiesce some of the neighbors that are not happy to see their neighboring properties turned into Airbnbs. One of the strategic moves Airbnb is undertaking is expanding in non-core markets, and they're focused on these expansion markets as part of their global strategy, and so far it's working. And then they're preparing for their next chapter, which will take them beyond accommodations, and you'll see more on this next year. As I mentioned, the company generates so much cash and it doesn't need to put it back in the business so it can return it to shareholders. Just in the most recent quarter, they repurchased $1.1 billion of their own stock. That's giving money back to shareholders. For the last 12 months, they've repurchased over $3 billion of their own stock. And they can continue doing this because, like I mentioned, the business model doesn't require them to put so much money back in the business. And so now that they're generating so much cash flow, they can return billions of dollars to shareholders, reducing the share count, increasing earnings per share. And I wouldn't be surprised if over the next few years, Airbnb initiates a dividend. Looking ahead, the company says they had robust momentum in September and they're off to a great start in the fourth quarter. And they see the strong demand trends continue into Q4. They expect year-over-year growth in nights and experiences booked to be higher than in the third quarter, so at least 10% or more. And then Q4, they also expect ADR to increase modestly on a year-over-year basis, which is going to lead to a strong revenue number of around 2.42 billion for Airbnb in the fourth quarter. As I mentioned, Airbnb stock is relatively flat so far. It started the year at around $135 per share. It's trading at $136 per share, but it's been a volatile up and down year for Airbnb stock. It's now trading at a forward price to earnings of 31. Now, to update my recommendation, I reminded you that I did have Airbnb stock rated as a buy all year long. I'm reiterating that recommendation today. I think Airbnb stock at a forward price to earnings of 31 is a great value for long-term investors. So yes, I still think the stock is a buy. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.